Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Good afternoon, traders. So we had a wild day today. We started this morning pretty much just a leave off of yesterday. Same exact thing. Tech sector names not really showing us any strength. Market, higher highs. And the laggard sectors, cruise lines, airlines, financial sector, all with a big gap up open. As we talked about overnight, what we were watching, SPX 500 USD. End of the day sell-off. Doesn't mean anything if it continues to hold the 12-period exponential support. Overnight, we saw continuation. This morning, we saw weakness and a bear trap. This bounce was extremely impressive. V-shaped recovery after a massive dump on high bear volume, right back to higher highs here in after hours. That is extremely impressive. So what it ended up being was the financial sector held on yet again. And we did see a little bit of weakness in the financial sector this morning, but it was just an hourly higher low. And again, if you want to have full confidence in a bearish position, you want to see XLF, QQQ, and XLV all dumping at the same time. When those three sectors are going in the same direction, that is maximum conviction. And the past 2 days, the pullbacks, XLF has not participated in those pullbacks in any significant way, so the bears have not seen significant follow-through. On the flip side, at the end of the day, everybody was running bullish. All of those sectors were at the high of their entire bounce into the end of the day, and we saw a massive push by the SPY bulls into the close with almost a 1% move in the last 30 minutes of trading. So bulls continue to keep this complete control. We're going to be watching for hourly consolidation, absolutely. We'll be looking for an hourly higher low to form when we top out. A lot of individual names will be looking for these hourly higher lows. We had names coming off their all-time highs, completely dumping, like SHOP and NVDA, V-shaped bounce, but we're in an hourly downtrend still. We have to set an hourly higher low and higher high into tomorrow for bulls to prove follow-through. We had names like Netflix extremely beat up, V-shaped recovery. We had Amazon, V-shaped recovery, tons of names where buying the dip was the way to go this morning. I was choosing Netflix this morning, but I was a bit too aggressive. I was starting to aggressively buy the dip right here. Ended up stopping out for a small loss. Let this other leg down go, and then started playing some small flips on the way back up. So missed the home run kind of day. If I was maybe 40 minutes more patient, it would have been a very big winner of a day, but that's the way it goes. Right mindset, poor execution in terms of being able to be comfortably in a trade and let it run. So in the end, again, hourly higher lows on consolidation, hourly trend changes needed. Even SPY will need an hourly higher low and higher high for bulls to be comfortable in the short term from here, because we are a bit extended with almost a $7.50 bounce with no hourly consolidation. IWM continues to higher highs of the COVID bounce. It is among the laggard names that are leading the way to the upside now, or at least shouldn't say leading the way to the upside. What they're doing is they're taking the burden of the bullish action off of the backs of the tech sector and the healthcare sector, and the financial sector and IWM are putting it on their shoulders for a couple days. So I've been saying the past couple days that XLF is the captain of Team Bull, and the question is, how long is that going to keep up? And once that is no longer the case, does that mean that the tech sector is back in full control? So IWM, once we top out on this move, wherever it is, anything above 130.06 is a daily higher low. QQQ. So there was our pullback and there was our weakness. The majority of the weakness the last 2 days has been the tech sector. And again, this is healthy as far as I'm concerned for the market. If we can hold up and spike and stay green while the tech sector pulls back, it's a great sign. We did break a little support level. We're holding daily 12-period exponential support. We haven't closed below that level since we got above it back in early April. So 3+ weeks of holding the daily 12-period exponential support. It's a great visual guide. Look at it on the 5-minute time frame today. Just a stair-step guide on the way up, keeping that uptrend strong. And the hourly trend change will be needed. Tomorrow, have to see healthy consolidation for a higher low, and then a higher high for bulls to get their follow through. Healthcare sector broke daily support today. We confirmed a daily downtrend. High of the bounce, low, which is a higher low, lower high, lower low. So that is a daily lower high and lower low pullback. And we are looking now, weekly consolidation is underway. We had a pattern of a higher low every single week for 2 months, and that broke. What do we call a loss of an uptrend or a confirmed downtrend with no follow through? We zoom out and look for a flag. Could this be a weekly bull flag? Absolutely, it could be. And if that's as much bear action as we see, then it is a bear flag or a bull flag. But need to change the hourly trend just like everybody else. Bulls are definitely a bit extended on this hourly bounce, so higher lows and higher highs will be needed to keep it strong. Financial sector, second huge gap up open in a row. As we said, one of the most important things we're watching this week, can the bulls break 2366? They did. They changed the weekly trend bullish with a higher low and higher high. They're in an area with a lack of resistance, and this 2-day move out of the financial sector is extremely impressive. The next level, 2417. Tons of space for a daily higher low. If we gap up open tomorrow, it'll be a 3 gap up bearish reversal pattern, and we'll be looking for a temporary top to be set in the near term if we certainly see that kind of open. But a strong close, healthy hourly higher low, established on morning weakness, traded sideways while the healthcare and tech sector bounced and then picked up the slack at the end of the day to close at the high of the day and help the bulls push with that end of the day little squeeze move. Biotech sector, big pullback today. We broke short-term support of 102.51. We're holding 97.18. Significant V-shaped bounce. Hourly trend change will be needed. Again, this is an hourly downtrend. Still, even though we bounced 5% from the low of the day, it is still an hourly downtrend. That's why we have to be a bit skeptical of some of these bulls. Not skeptical, but just make them prove it. And by proving it, it's the hourly follow-through. As far as the weekly chart is concerned, again, weekly consolidation underway, but just looking for a higher low. SMH, daily support was 136.09. We broke that level. No bear follow-through. Weekly chart, not even enough pullback to start consolidating. Bottom line, second highest close on the entire bounce. Tied for the highest close in the entire bounce. And overall, the bulls were holding on just fine. Today was about if you're a fundamental bear and have bearish positions, I can't imagine a more frustrating day than what we saw today. As far as bears with a great start to the day. Not only the initial dump, we saw that, we saw weakness yesterday. It was similar. The biggest difference was the dump and then the lower high and lower low on increasing bear volume. That's exactly what the bears want to see. It was just the lack of any follow through after that point. The VIX still holding down here, 25.90, so we did drop to the lowest price on this entire move, but it is a base of support. Whenever I see lower lows and a lack of bear follow through, I do start watching for falling wedges, so it will be something that we keep an eye on. Certainly not going to make any trades based off of it, but watching this tightening range. We'll look at another falling wedge in the minors today that was a good signal. So gold, we started this morning watching for a 4-hour oversold bounce. First 4-hour oversold conditions from the massive bull move that we've seen over the last couple months. So bulls were there to buy it. We'll need a 4-hour trend change for this bounce to have follow through, but anything under 1754 is just a daily lower high. We are looking for a weekly higher low. So this is an example of how we have to look at longer term time frames to get the bigger picture and then zoom in from there. So most likely scenario, we're looking for a weekly higher low. Absolutely. What do we need to see a weekly higher low? A daily trend change. What do we need to see a daily trend change set up? A bounce that is big enough to be looking for a higher low to form once it tops out, knowing that anything under that level of 1754 is just a lower high. So if I want to be a patient bull, I can wait for a sizable bounce. I can say, okay, that's big enough for me to be interested. I'm going to scale in on the pullback. I'm going to put my stop under the low. And if the bulls change the daily trend, our weekly high or low is set and I have a good position. If the bulls do not change the daily trend, further weekly consolidation is coming and I stop out for a manageable loss. But first things first, have to change the 4-hour trend for some bounce follow through. Silver, tightening range. Let's see if it's a 12-hour equilibrium. You can look at it on the 12-hour. Daily is pretty clear. So high of the move, low of the pullback, lower high, higher low form today. Most important supports, we've got two of them, 1685, 1672. Most important resistance, we got two of them, 1745, call it 1746, around, and then 1763. Bulls are still just fine. Daily high or low established, and they're keeping that strength. So we headed into this morning knowing that we were looking for a gold 4-hour oversold bounce. Today was the kind of day where there was just too much to watch. We were watching bearish entries on the gap up opens in the airliners and cruise liners. We were watching bullish entries on names like Netflix and Amazon that are dumping and previous lead bulls. And then we had miners and gold, commodities, and oil. Oil was a bearish entry. There was a lot out there today. Too much to keep track of. So gold, knowing we were looking for a 4-hour oversold bounce, we look at the miners. The miners start the morning in hourly oversold conditions with the hourly RSI in the teens. So that tells us look for an hourly bounce with gold. We then had a 5-minute falling wedge. So posted this at 11:50 a.m., I believe, and then completely forgot about it. And in the end, it ended up marking the bottom. So again, the premise, longer term time frame. What's the most likely scenario? 4-hour oversold bounce in gold, hourly oversold bounce in miners. So, okay, I know that's what I'm looking for, bigger picture. I know that's the most likely scenario. So what do I look for on the shorter term time frames? Signals that we're changing the 5-minute trend and starting an oversold bounce. So when I see these lower lows being hit with no bear follow through, that tells me, okay, bears are a bit exhausted. Let's look for a falling wedge pattern. We then had a beautiful breakout and the bulls kept the 5-minute uptrend in their favor from that point through pretty much the rest of the morning into the early afternoon. Bigger picture, what's the most likely scenario? Zoom in and look for the details that give you the trade setup for that most likely scenario to play out. Oil, we were watching for a bearish entry for a number of reasons. Number one, 35.18. Key clear resistance. We're topping out just under that level multiple times. 34.66, 34.81. Number two, 100% bounce on the weekly time frame with no consolidation. We're overextended. Just like the hourly chart is overextended on some of these stocks and some of these sectors, the weekly chart is a bit overextended. We have not consolidated in a 100% move. So what's the play? Top fishing against resistance. We have not confirmed a 4-hour downtrend. We lost the 4-hour uptrend, but we never saw the lower high and lower low confirmation of the downtrend. We've seen that now. Pull back, lower high. Try that again. Pull back, lower high, and then the lower low. Confirming the 4-hour downtrend, rejecting from resistance, and bears are getting beautiful follow through. Whether you're aggressive and making an entry and just putting a stop over 34.81, or whether you're patient and making a bear entry once 33.28 support breaks, either one is giving significant profit. 30.72 key support is the level to be watching from here. Next time we bounce, we'll be looking for a 4-hour lower high compared to 34.27. Natural gas, daily trend change and no follow through means zoom out and look for the potential of a bear flag. Could this be a weekly bear flag? You could call it that. This pullback from 205 to 156, so a 50-cent pullback, size of the bounce, 25 cents. So that's just getting to the point. 50% retracement, not the ideal kind of flag. You want to see the bounce a little bit weaker than that. But what matters most to me is the 12-period exponential resistance with its million rejections, and we're rejecting yet again. For the bulls to shake off this rejection, we have to form a higher low compared to 1604 and convincingly break 1769 for daily bounce follow through. But the bears are still comfortable on natural gas with where we stand right now. So we'll keep an eye on what consolidation looks like overnight in the S&P 500. Again, would not be surprised to wake up to a lower open or a higher open. Honestly, I wouldn't be surprised at all for either. If we wake up for a lower open than where we closed, it makes sense. We were very overextended. We didn't establish an hourly high or low. If we open higher, it makes sense. The bulls have complete control. The bears have nothing to go off of at these levels. They're backpedaling. They're on the ropes. But I do certainly expect overnight hourly consolidation. It's pretty much just a question of whether it can be healthy to be looking for continuation, or if the consolidation becomes significant enough to then be looking for an equilibrium. But we haven't even started consolidation, which is step number 1. Congrats to the bulls and the bears. The bears there was plenty of opportunity in both directions today, as long as you protect those trades. And we'll see you tomorrow. Have a good rest of your day. Do good things. So there was a woman on the local plants page that posted a little artsy project that she did with wood burning in these little name tags during quarantine. So I commented on the post and said, there's a business idea right there, and suggested that I would buy some from her. And then a bunch of other people posted and said they would as well. So I ended up buying a couple dozen, certainly more than I need, but she was a woman who was out of work in the brewery industry. So now she's got a little side hustle going on, and I planted these, or put these all around the garden as a nice little touch.